Hey everyone, we're doing a little quick zoom here, just for levels and what we really need to figure out. Okay, I'm gonna go and get a clean chart. Oh damn, I don't even have my other trading account open. Stay with me, folks. So we're talking about levels, and this applies to anything, whether it's VWAP, right? It's, you know, uh, VWAP, moving averages, whatever we're taking trades off of, whatever you're using, right? How do we look at this stuff? Right? So this is just going to be about levels and how we look at it and interpret levels. Okay. So here, let me clean this up. All right. We're looking at the market right now, right? Let's say I just randomly draw a level, right? Say we're going to look at 55.81 and a half. Okay. Now, this is 55.81 and a half. Do you see how when the market comes down to that level, do you see how the offer lifts, right? Do you see the red line? That's the offer, and that's the level. Okay. So when the market comes down to that level, if that red line doesn't go below 54.81 and a half, what does that mean? What is the actionable intelligence that you can take away from this that's meaningful and actually makes sense in business? Not some concept. See how the market came down, it printed under that level, but the offer stayed above it. This was probably a market order. Okay. Sellers can sell higher. Exactly. Now, I want you to close your eyes and put yourself in the mind of a business person, not a retail trader. Okay. And you're long 500 contracts in this area, right? Because you were building a position. Now, if you're a seller up here, right? As long as buyers are willing to pay over 81, you can offer the market over 81 and they'll come and take it. When they stop taking your offer, and this is why I tell you folks, when you're long to put a sell order out, because if you have a sell order out there and nobody takes your offer, which means I'm offered at 81 and three quarters to sell 20 contracts and nobody is buying my 20 contracts. That means you must lower your offer. This is actionable trading intelligence. You understand that there are buyers at 81 and a half and 81 and a quarter. So you will offer lower to jump ahead of the other people who are offering product for sale. Does this make sense? So you're selling oranges and Jim and MP are selling oranges, but Jason jumps in front of you to sell at a cheaper price. Well, you have to price compete with him. Once he sells his inventory, he will be gone and you can sell at a higher price. But if more Jasons show up, then you've got to lower the price that you're willing to sell your goods. And that is how you look at levels and you watch the offer. It can be any level, right? The level is meaningless. What you're trying to do is interpret what the order flow is at that level. And the best way to do that is to use a 1 minute candle chart, not any kind of footprint software or anything, because you can watch in real time as the sellers, do you see how they're offering under it now? So Jason showed up. We were, Jim and I were selling, Jim, me, and MP were selling happily. Now Jason goes and shows up and he offers lower. Then Raj shows up and he offers lower. So now we have to put it on sale. And guess we're going to sell it down to where we paid for it. This is our cost basis. Does everybody understand? And that's how you look at a level. So it doesn't matter how many times we've transacted at that level, right? All that is going to do is bias you, right? Because if you think that there's a seller there every single time and you just assume there's a seller, it might go through that level, right? Because the order flow constantly changes on a second by second basis in this market consistently. So the order flow is in flux all the time. The level is fixed. You use the level to determine the order flow at the level. This is how people used to trade 100 years ago, right? Exactly, right? So if you exactly, Jim. If you want a short, see how that level, see how the offer is raising? We went down there and there's buyers here. They came into the store, right? This is like when you're standing outside a store, waiting in line, and they let a few people in the door. It's so simple. In the old days, what traders would do is they'd watch a level. And when the market broke over that level and came back and tested it, they would buy and put their stop under the level, right? So the market goes under the level, comes back up. When it tests it, you go long, you put your stop here, and then you use the other levels to get out. I like to wait because they're a 1 minute chart. I don't mind waiting. Now, Jason, sometimes you're going to miss the trade, and I'm perfectly fine with that. Sometimes, like say it comes down to 81, 81 and a half, 81 and three quarters, and all of a sudden somebody drops at 5,000 contract buy order and it rips to 84 and you can't get any. That happens. That's business. But yes, I like to wait. See right now I see that the low of that candle isn't taking out my level. I'm more likely to go long. No, there's no reason to talk to volume on specific levels. That's not important. This is all you need. You don't need anything else. Do you see how simple this is? You don't need to overcomplicate it. CMP, if you wanted to talk volume at a certain level, I'm going to ask you, are you trading over 1,000 contracts? Because if you are, then we'll speak to volume. If we're not, then there's no reason to speak to volume. Does that make sense? Too many cooks ruin the soup. MP, do you understand what I'm saying? Right? It's too much information. You should all you need to do is to trade is just to have this, right? Yeah, don't think it through too much. Just focus on what I'm trying to teach you, right? And this is the problem, right? This is your exercise for the next 2 hours, right? This is your exercise. Can you focus on this for more than 30 seconds without your mind drifting? Then work it out to 60 seconds, then 90 seconds. Can you focus on watching the offer for 90 seconds without looking at your phone, looking at the VIX, looking at the Twix, looking at, you know, whatever you're looking at, right? Can you focus? I swear to God, if you focus on this, it'll change your life. But that's why retail traders, because they're always chasing everything. They got 20 screens, 50 different softwares. They're looking at gamma, theta, beta, kappa, phi, data, kappa, all that crap. It's just the bid and the ask. It's a market, right? What's the largest time frame? I use a 1 minute. Keep it simple. Just keep it simple. Don't look at anything else. You have the market profile to tell you where inventory is, right? Right now, if you looked at this chart, you knew that the inventory is below us, right? You don't even need market profile to figure that out. It's trend up, right? You can see that here's your inventory. Here's where we're selling the inventory, right? So this is accumulation. This is distribution. Real simple, guys. Real simple. We overcomplicate this so we can take your money. That's why you guys have Delta and Schmelta and all of this crazy crap that they try and sell you. Nose print charts and this and that, and it's just trade simple. Just trade simple, right? So if we were long, right, I'd be selling into this. right? See how we knew to go long instead of going short because the offer raised up. We saw it dip below, come back up, long stop, kaboom, right? It's simple. You just have to practice this 1,000 times. You have to practice it with small size, and you have to practice it with an open mind where you are not tied to the outcome. You focus on the offer. Don't worry about the bid. The offer is supply. I used to be the offer for 25 years. We'll take care of the bid for you. Okay? Don't worry about demand. We'll take care of that. Why? Because when supply runs out, it demand comes in. Right? It's like the pretty girl who walks into the nightclub. All the guys go. There's only one pretty girl. You guys get it? It's simple. This is not complicated, right? Focus. Your life will become so much easier as a retail trader if you can focus on this simple concept, right? Don't let anybody tell you any different, right? So there's our long, right? We saw this was our look below. This was the fail. So our long was here. Our stop was underneath that candle. And now we're selling. You just focus on the offer because the offer is supply, Jim. It's a market. A lack of supply creates demand. How do I know? Because I've taken stocks from 30 cents to $300 a share by myself. I've held a stock at $30 on NASDAQ for 3 months with 90 RSI because I limited supply and created a short position for the Badil principles. Does that make sense? Think of toilet paper during COVID, right? So then you see them distributing, you get out of the trade, right? So here you're long at 54.82, 82 and a half. You're selling at 85.86. Goodbye, right? It's simple. Just focus on the level, focus on the offer at the level. The offer is the red line, the bid is the green line. When large sellers come in, the bid will run away from the offer, okay? Because the offer is moving down. The bid will move down to take advantage of lower prices. When the offer moves up, the bid will chase it like a dog trying to get a treat. Think of, you've ever seen a cat when they dangle a piece of string and the cat goes to get the string and then the guy lifts the string? That's the offer. If that's going on, that means there are buyers. He sees that there's interest, price will go higher. This is what we call a backfill. So we went up to create demand. Now we're going back and we're filling in that demand with supply. That's why the offer is moving down. This is kind of like a sale. You see? Do you see how clear it is? There's no lines, there's no indicators, right? There's just one level, and you look at how business happens underneath that level and above that level. Any questions? Did this help? So Jason, you stay to a 1 minute time frame until you start getting consistently profitable. Do 1,000 trades on a 1 minute time frame. Exactly like we just showed you. Right? And then once you're consistently profitable, then you can scale up in time and size. Right? It's just consistent, boring work. And if we do it and focus, right? I can sit and watch this chart for an hour without looking at anything else because it used to be my job to focus and concentrate. If I didn't focus and concentrate, my clients would lose hundreds, if not millions of dollars. And guess what? The only job I would get on the street is sweeping it. right? That's why I got business because I saw little details that nobody else did because they were too distracted, right? Because the other traders are online shopping, talking about their weekend. I'm staring at the screen, right? What if the offer goes against you after you enter the trade? Well, it's trying to be your friend and tell you, hey, buddy, psst, psst, you're long at 5. I got sell orders under 5. What do you want to do? What do you want to do, Jim? You're long at 5. You see, and somebody comes and goes, psst, I got 100,000 to sell at 480, and then 100,000 to sell at 470. You own it at 5. Maybe you should scratch, right? And we all scratch. We all scratch, right? There's no shame in being wrong. The shame is when we're wrong and stubborn. See? And then look at the tops of these candles. Check it out, right? I'm curious, will the selling stop at that level? Just watch. Exactly. You got to be able to admit you're wrong. My mother used to tell me I was wrong all the time, so I'm used to it. It's no big deal. I don't have an ego about being wrong, right? If people go, you're wrong, I'm like, oh, crap, I'm wrong. Oops. All right. It's like water off a duck's back, right? I'm not in one of these insanely smart, like Mensa people who freaks out when they're wrong, right? Look, the responsive buying is coming in before that level, right? That means we got buyers. Attention Kmart shoppers. See, that's all there is. Find a level, watch the offer at the level. If the market starts offering above it, for the love of God, don't short it. If the market offers underneath it, you can short it and stay short until the offer comes back up over it. It'd be nice to make some profit. So don't ever put your profit at break even. There's no point even doing business if you put your profit at break even. Pay, at least cover your commissions. Okay. Anything else? I don't want to take up too much of your time. I hope this is helpful. You think this will be helpful for others? Let me know. I'll post it if it is. Simplify your life, my friends. Simplify your life. You know, right? There's no need to get gray hair. My old boss, he had a Pepto Bismol in his Mercedes, on the trade desk, in his office, in his Viper, right? He was always stressed out. I felt so bad for the guy. You know, it was like I'm running next to a fire holding a can of gasoline instead of water. You don't need to do that, right? Just keep it simple. All right, everyone. Thanks. We'll see you in the room. And for those who aren't, in our room, come join us at microrefutures.com. Bye for now.